Hey, thanks for joining me today. Thanks very much. And you're tuning into a life-changing video. It's just for people like yourself. I'm a trader, husband, and athlete. I've invested in stocks for several years and worked full-time in financial analysis with Deloitte, Lockheed Martin, and others. I've learned statistics in graduate school and applied graduate level statistics while learning two masters um, and one's in IT, one's in public policy and public administration. This past year, I've made over 50% returns simply by applying economic knowledge and news while crunching data over various time lenses. Last week, I published my first executive training for busy professionals who have interests in learning professional tips for the stock market and using tools. Statistics is a great opportunity to study such things as probability ranges, trends, and so forth. I hope you find this video enjoyable. Hit the like button and feel free to donate to this cause of trading for professionals and executives like yourself. So we learned about the trend and the divergence seen last week in that first video. I covered a few stocks and I'll continue to provide videos about those. And as we take a deeper dive into Akamai, I wanted to show you a few things. We learned about the trend and the divergence that we saw over the 3-month period starting in January of 2022, ending a few days ago at the beginning of April. The trend over the first month to month and a half seemed to reverse from gradually going down to gradually going up. So that was why I identified this stock as something to identify as a hot topic. And I'm always identifying hot topics on a quarterly, semi-annual, or annual basis. Quarter ends are always a great time to study statistics, to see specifically how a stock will do during diverse economic times. And the past few months have been interesting because overall stocks were in a downtrend for a large part of the last 2 or 3 quarters. The 1-week variance of about 5% this week is certainly notable. I find that stocks that traditionally are stable and steady stocks can vary on average between 0.5 percentage point to 1 or 1.5 percentage points on very busy days. And ordinarily, that's what you'll see on busy days. So buyers had pushed this particular stock, AKAM, to a 3-month high at the beginning of the week, followed by what amounts to some downward pressure. Downward pressure is often implied with a certain level of skepticism. However, as you'll learn over time, stocks go up, and when they go up for a continuous amount of time, professional traders, specifically retail traders, investors, hedge funds, experienced professionals, you might even call them day traders, will book profits effectively because they understand that over the immediate short and medium term, the stock has made them either enough money or they've invested such a big amount that they're able to take profits on a certain percentage of holdings. And they understand that if this is a healthy trend, buyers will continue to be attracted to it with institutional shareholders, professional companies, and banks investing in it for a long run. So they understand taking profits involves repositioning entry points into a stock with anticipation that it will continue to go higher. By the end of Wednesday, the stock had stopped selling off, and we were, heading back up to an uptrend. And that's why I think taking your time to study charts over the quarterly basis and weekly basis can give you a healthy dose of, not getting stuck on general terms that apply to other stocks, but focusing on high performing trades and stocks. So we'll continue with our next slide and dig down a little deeper.
Yes.
Okay, looking in greater detail here at the Akamai stock, we're just highlighting the details that go into the analysis of performance on a short-term basis. You'll find some day traders and swing traders looking at trend lines and performance on small intraday intervals, whereas we will look at intervals of multi-days or weeks. So in this video on Akamai, I want to talk about what is considered trend and stochastic statistics. Stochastics refer to the price of a stock as it relates to the high or low in terms of price during a given period of time. For the short-term 1 week price activity, I'll direct you to the second column of our slide where I've highlighted the high, the low, and the interval of 1 week and 1 month. You'll notice in period 1, the high was $121.96. The low was at $117.79, roughly $4. Again, roughly 5% move, or what you might call divergence. So you might say the average during the week was right around $119. It could have been as high as 121 and as low as 117. Your buyers were buying between $117 and 120, and your sellers were selling between 120 and 122. The stock closed $3.60 from the high of 121, so a little closer to the low of the 117.79 cited previously. In fact, it was only 57 cents off that low. In terms of stochastics, you'll say that this is a negative stochastic. So if I was to show you a graph of that statistic, you would see that the measured statistic, which is somewhere between 0 and 100, you'd find that the stochastic was closer to the extreme range, which is to say, you can be either extreme up or extreme down or right in the middle. You would rather see a stock going from low to the middle in terms of a bullish activity, but in this case you found it at an extreme low, meaning it's headed downwards or was headed downward in the past week. Again, this is not a predictive sort of stock. In other words, you could use it as part of a bigger predictive examination simply by extending the so-called time frame. So let's go over to the 1 month time frame and we'll look at 122 is the high, not far off where we saw over the week. Again, we've mentioned all-time highs here, and the low was closer to 107. So we know that the stock closed at around $118. And again, I show in the statistic that the high was $3.65 away from the close of business Friday, but almost $11 from the low of the period of this past month. So again, if we're looking at the statistic for stochastics over the duration of 1 month, you'll find that the stock was right closer to the extreme high as opposed to the one week indicator, which was the statistic was closer to the low. So
on a 1 week range, you might say the stock seems to be going down a little, but on the 1 month overall, it's going up tremendously, as it is trading only a few dollars from its high, whereas it's trading many dollars away from its low. This is a beginner to intermediate course, so you want to begin becoming familiar with how people analyze stocks and are able to sort of generate analysis based on trends and ultimately trend changes. And stochastics are a really fundamental, statistic, a fundamental tool that you need to have to be able to really trade professionally or semi-professionally on what you might call a day-to-day basis. You're probably not good enough to trade at a day level yet, but a short-term investor to a medium-term investor and definitely to a long-term investor loves to look at trades, through various lenses. You might say short-term lens, medium-term, and longer-term visualization. So overall, this is a healthy stock, which in the past week looks like it's, not as appealing as you might have thought otherwise. But again, that's the beauty of analysis. I'm sticking with Akamai as a stock that could obviously make some headway. And well, I hope you like that analysis. We can continue to delve into stochastic and other stocks later, but for the moment, what we'll do is we'll look at another tool, which is a trend line, not one that you are drawing onto a specific chart like I've done, putting together straight segments of lines over the various days and times to try to analyze highs and trends over a chart. Rather, we're looking at what's called a trend line that extends beyond the lens that we've chosen to look at. So these are not going to be graphically displayed. They're going to be displayed verbally. Under statistics, stochastic analysis, you'll see trend, 10 SMA bull, you'll see 50 SMA neutral, and you'll see 150 SMA neutral. What does that all, really mean? I mean, doesn't that look like the inverse of what we discussed? We discussed that in the short term, this stock was going down, yet here we're saying in the short term, the stock looks bullish. Well, for me, the short term is either 1 or 2 weeks. And the moving average is simply the average that this stock has traded at over the last 10 days. So that means that on average, in the last 10 days, if you did the average of the stock over the previous 10 days, the curve was going up slightly. So 10 days ago, the average was X. Today, the average is higher. A 10-day moving average appears bullish. To me, that's pretty interesting. On the 50-day average, we'll look at the stock as it traded today versus what it traded 50 days ago when there's virtually no change. The stock is trading 118 today. 50 days ago, which is about 22 months ago, in terms of business days, the stock was also trading there. To me, that's really quite good, right? It's like you didn't lose any money on the stock that during a very volatile period of economic and political times has been volatile. So for me, I like to focus on the meat on the bone. Is the stock something with meat on the bone? Absolutely. Looking at the 150-day moving average, what is the stock trading at today versus what it did 3 times as many averages, 3 months ago, we'll say. How is that looking? Well, 150 days ago, several months ago, the stock was still trading right around where it is now. And, forgive me, but I'll restate the obvious. No stock in this, in the S&P 500, given the index has gone down most of the year, has performed probably as healthy as this particular stock, right? So obviously I'm paying attention to stocks that I've had on a watch list because they're healthy, because they belong to a particular index that's clearly well demarcated and followed. And this particular stock, considered maybe IT, maybe slightly growth oriented, meaning a long-term investment, has really performed. You haven't lost money if you invested in Akamai over this year, right? Unless you were a short-term investor and happened to catch it on a few short terms. So again, this is meant to be a professional education. It's meant to teach you how a Wall Street investor thinks, meaning a guy who's handling hundreds of thousands of dollars for many clients that have money pooled together in an ETF or some kind of retirement account, and they need the money to try to perform as well as many of the indexes over many years. And believe it or not, Akamai is one of those stocks that people want to keep because in the long run, they're not really losing. And that's what people want. They want an account that's growing incrementally over time and it does better than performance in a riskier investment, whether it's real estate, whether it's bonds, whether it's a riskier type of stock. So that's the onus of these types of slides to discuss how am I analyzing the stock today. I'm not going to turn around tomorrow and change my analysis. It doesn't work like that. An analyst is going to give its thumbs up or thumbs down because it's done an analysis which is supposed to last, if not for many, many years, for many, many months. So this is not a hurry up and trade video. This is a slow down and understand the concepts. Because at the end of the day, a bigger stock is likely to be more attractive to people, right? More stable. And even in the short term, some of these big stocks, if you happen to trade them at the right time, can generate, 5-10% in a short amount of time. So we've covered a lot. I know this video is getting closer to half an hour in length, and I think most college classes are close to an hour. So if you've stuck with me, I don't expect you to be, in college shape when it comes to academics. In these stressful times, we're torn between work, having fun, and so on. And I hope this is kind of a combination of having fun and education. Again, smash the like button if you like it. As you can see, I'm wearing basically the same stuff I wore last week, which means I'm wearing a runner's t-shirt, and I consider my education to be heavily balanced with a work-life balance, which includes nutrition and physical fitness. So I'm not trying to seem nonchalant and average or sophomoric. I'm simply trying to share my professional opinion in a manner that's comfortable to me and reflects the person I am, someone who's putting in the hours on a regular basis. So look for my stock market analysis on Akamai periodically. Compare it to other people's research. And do your due diligence. Never invest based on one or two slides or one or two people's opinions. Because you may find, blaming yourself and others to be more likely. You want to be confident and understand your decision was educated and certainly not somebody else's. Thank you, and hit the like button.